Hey everyone, Trader Tim from eMiniMind.com here doing a Monday market analysis video. Today is the 12th of December 2017 and we're coming down to the closing weeks of the year. And boy, what a ride it's been. Last week was probably one of the best weeks, easily one of the best weeks of the year. Definitely one of the best weeks that I've had in a long time. Some pretty incredible moves we saw in Tuesday's session as well as on Thursday. Caught some huge moves intraday in the E-mini S&P. I did a couple videos recapping my trades from last week. You can find those on the E-mini Mind YouTube channel. So, what should we expect now this week with all of the fireworks and great trading last week? Well, at the tail end of last week on Friday, we pulled back to the next 50% retracement. That's a 2607. And if you've ever studied Gann or Jesse Livermore or any of these traders from the early 1900s, there's there's a lot of nuances that come with trading that you can learn from reading about some of these great characters. But one common similarity is that they drill things down to its simplest form. And sometimes we look at the markets, you can overcomplicate things with tons and tons of indicators, all of this news that's being thrown at you, and it's hard to synthesize through it, to pare it down into very, you know, actionable data. And so for that reason, I really have always gravitated towards how can I simplify my trading. And for the last 10 years or so of doing this day in and day out, both day trading and swing trading, it's those simple methods that work over and over again, year after year, whether it's a bull market, a bear market, a choppy market. And the 50% retracement is a very sound principle for analyzing the markets, for forecasting projected targets, for entering at low risk entry points. And there's obviously a lot that can be learned about the market. But if we try and strip away the unnecessary things and just focus in on the important parts, it all starts with, understanding the market structure, and that is broken down into, the retracements that the market forms. So just by pulling from the most recent major swing low back here in the middle of November to highs from last week, we pulled back to the 2607, and that target, the negative 23% target, or roughly 20% beyond highs, is up at a 2682. Now with today's price action, a little bit different than Thursday, where we gapped up and then rallied before selling off, still closing positive, but selling off on Thursday. Today, we gapped up, had a tiny move higher, and then pretty much just drifted lower most of the day, closing lower on the day below yesterday's close, whereas the close from Thursday was above the previous day's close. So definitely some profit taking here. Definitely, not the all hands on deck. Everyone is bullish, and that's okay. Last week and even the week prior, I was talking about how we have this trend line here, and just a slow drift sideways to down towards this trend line. If we can just, move towards the trend line, touch it, and then make another leg higher towards this 2680, that would be a very likely scenario. If we do get some more selling tomorrow and on Wednesday, even a retest of 2607s, it's still a healthy market. Now, one thing that I want to point out that I've been seeing in some of the bigger names that have been both, active on the trading side of things, but also bigger market players. Some of the tech names like Google. If we start by looking at the S&P, and we can see that solid trend up, and then we can take a look at the Nasdaq, and we can see, yeah, pretty strong uptrend, but starting to get some big body candles to the downside, bigger volume on those down days. And so if we start to look at some of those individuals, we've got increased selling on the move down with Google, a widening formation, meaning we start with a tight range, we make a higher high, we make a low, we make a higher high, we make a lower low, or widening, and that's typically a sign of a reversal. Apple looking, still pretty decent. I would say Apple's looking one of the best out of the tech names, but still some increasing volume on this last move lower. Netflix has broken down from its 50% retracement and starting to show, a little bit signs of weakness. And then Amazon also bigger selling to the downside, and this is coming into the holiday season, end of the year, and these stocks are usually stronger into the end of the year. Best Buy has kind of started to break out, and that's another one that we usually see do well around Christmas time. The shippers, UPS, FedEx, they're both doing very well. You can see kind of the opposite effect, a tightening formation here where we're getting tighter and tighter and tighter, and then boom, the pop, that tightening formation, and then the upswing following that has stronger volume. So that's something that you kind of expect around this time of year. But for the last couple of weeks, the UPS and FedEx have been trending lower, and the typical into the end of the year, you would see these stocks doing well. Home Depot, gosh, this guy's been trending. They had a lot of good opportunities this year and trending the last couple weeks, just parabolic straight up. There's been a couple of opportunities to get long here that I've talked about in the trading room as well as in some of the previous videos. And then some of the healthcare stocks, Abbott, Cigna, still trending upwards, but we're starting to see these bigger body candles, which could be a sign of some sort of change in the leaders versus the laggers. So previously we were seeing Google leading us or hanging out up near highs as the market's going up to highs. And now we're seeing Google selling off from highs and other stocks like UPS that were selling off when the market was making new highs. Now those stocks are making a run higher. So I bring this up even though you may not be actively swing trading, because that can give us some clues as to what to expect on the broader market here, knowing that, okay, we've got some changing of individual leaders in the broader market. We could have a lot more back and forth and some more range-bound consolidation to come, as opposed to all these stocks swinging in the same direction, lifting the market higher. So ranges have been pretty good. Today almost a 30-point range, Friday 45 points, Thursday 24 points. So there's been a lot of opportunity in the market, and it's just a matter of identifying those low risk entry points to take advantage of. Last thing I wanted to highlight today is when we talk about the importance of trading with the trend. A lot of times you'll see me talk about the 512 tick chart that I'm executing my trades on over here on the right. But if you come down to, let's say, a 15-minute chart, just by identifying what is the trend on the 15-minute chart, and you can see it just like you would draw a retracement on the 512 tick chart, like so. We have a little bit bigger time frame that you can draw the same type of setup. So the concept is the same, and we want to be able to identify what's the larger trend And if the trend is down here on the 15 minute, then we want to come to the smaller time frame and look for entries in the direction of the larger trend close to the start of that trend, close to that 50% retracement. Now, the nice thing about a 15-minute chart is we're seeing the trend lower today on the 15-minute chart, but if we scroll out even more and go back to the daily chart, well, it's pretty clear that the daily chart is up. And so you don't always have to trade with the daily trend, but it's important to at least have a 15-minute or an hourly trending in your direction if you're looking or expecting for some bigger moves. That being said, a lot of times we will take counter trend trades, and those can be very profitable as well because we're looking to enter on a possible reversal. And so, there's all these little complexities that go into trading each day, but it's important to be able to simplify things. And one of the ways we simplify is to uh, utilize the 50% retracement and keep my trading screen very clean and just looking at the market structure, the higher highs, higher lows, swing highs, and being able to identify what is the market trend and then where is the lowest risk entry point into that trend. So I hope that was helpful. If you enjoyed the video, give it a thumbs up, and don't forget to subscribe to the eMini Mind YouTube channel. Thanks everyone. We'll talk to you soon.